Hello, traders. It is 8:01 a.m. Chicago time on the 6th of June, 2018. It's Wednesday. We're almost halfway through the week already. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, the allocation of risk is mixed today, with the euro up 52 ticks or pips. The Dow is up. The S&P is gapping up about a little over 3 points or so. The DAX is up, but also we see the cables up. We see gold is up, NASDAQ down, Russell down, and the notes and the bonds are down. It's just a mix. Crude oil is trading in a range now. It's been trading the same wide range for 3 days, $66 down to about $64.20 or so. Crude is opening is currently down 37 cents from yesterday's settlement, or 0.5%, approximately 0.5%. So mixed bag coming into today. The way the S&P finished yesterday was kind of bullish. I'll go over that in a minute. And as far as what we've got today that could be leading us around, we did get some numbers at 7:30. Trade balance in the U.S. Some retail PMI numbers, nothing significant out of Europe this morning. And then we're going to get crude oil inventories at 10:30, expecting a draw of 3 million barrels, a surplus of 1.121 million barrels of distillate inventories, and so on. Of course, if you need a calendar referral, just reach out to me on Twitter or futurestrader71.com/contact, and I'll share with you a calendar that's very customizable and that I like, and it's free. In any case, that's what we are shaping up for today. Let's look at yesterday and where we had our scenarios set up for. The scenario that worked out yesterday was scenario 2, which is to test into 52.75, take out the overnight high, and then roll over. Small bounce value low, which did not happen, and then a continuation to the gap zone below. This little gap zone here that we created between Monday and Tuesday. That's the key test, is below the prior day's range. That's pretty much what happened, but the market bounced. The ES bounced all the way back up to almost to the high of the range, showing a fair amount of strength. The delta overall finished sideways. Here's what actually happened. We opened in a very clean opening swing, and we broke higher, and we missed that upper target by 1 tick. 52.75 was the stock zone, and it's the top of the gap. Top of the gap zone from March 19th, and it got to 52.50. Missed it by a tick, put in a double top, and then proceeded to move back down into the point of control, which is right here. Consolidate for a second, and then continue. I expected a bounce at value low. It pushed through value low by about a point or 5 ticks for a mid test. Beautiful mid test here, beautiful mid test here. This is where this is the trade that I put in the room. And continuation in that case, I was looking for 41.75 before I moved it right here. 41.75, that was a key target. That's where the stock zone was. It pushed through that 41.75. If you recall, 41.75 was a high. The 41 area was a high many times in the past, so I expected that to be to provide at least temporary support or a bounce. It ended up pushing through by about 2.5 points, which is pretty significant, before it put in a double bottom through yesterday's low, or the prior day's low, and then we started to drift up from below, and we ended up pushing and closing near highs. If the market hadn't stopped, we would have looked for a neutral day. If this had happened earlier in the day, This is a high probability neutral, and since it happened on the close, it's a high probability push higher on Globex, and Globex ended up pushing to 58, which is an old stock zone that's been up here for some time, and that pretty much capped the buying into the overnight session. So oddly enough, the gap zone created on Tuesday stays intact since it's not closed, and the gap zone from March stays intact. It hasn't been removed because we still have a tick. Now, really, it should be removed. We've traded through it. It's an area of an unknown auction. That's what a gap represents, and we have put in a point of control dead in the center of it. It's pretty much been tested and accepted. You can remove it. I just left it on for today's session, and it'll be removed going forward. The volume yesterday was about 33%, what we would consider to be the common volume in the ES. I got to tell you, the current trade mimics deep summer trading. It's definitely it seems early to me. It's generally we get to the end of June before we see summer trading. Schools let out here in the U.S. It starts to let out now, but generally middle of June to the end of June, and families go on vacations and so on. But already we're seeing really light volumes. I mean, the day before, remember, 640,000 right here, 640,000. That was almost 50% lower than the most common daily volume. It's pretty bad. So I think we're already in the summer trading, and it's a grind, and it's also a drift. It's a drift up. We are slowly drifting through areas that we've been battling for some time. In order to see that, we pull up the composite and look at it. Let's extend this composite forward. And so it's, like I said, it's a bit of a drift upwards. Okay. So this is what we've got. Oop, there shouldn't be a break in that line. This is what we've got. We're pushing through key areas. Remember the 2720 that has shifted to 2726. And now we're trading inside of this balance zone here from the 9th of March to the 16th. We're trading this profile. The next key area up is 2786.75, I believe, or 2787, something like that. And then beyond that point, if we get through 2787 above, which is only about 30 points, once we get through that, then we're back in this gap zone here, and the next area will be the next high volume node. Remember, high volume nodes describe what? High volume nodes describe acceptance. Every time we have a lot of volume, we have people who are agreeing on price. And so we have consensus, and that's the market's main task, is to find value by finding balance, finding the highest number of buyers and sellers who are agreeing on price. The statistics for range and for volume are right here. Okay, so the most common volume for the day is 1.19 million. Okay, and 13 points for the day. Cool. So that's what we've got. That's what I'm comparing the action to. Yesterday's range was 13.5 points with volume well below the expected value. What do we do into the overnight session? Looks like someone wants to teach me how to trade. I'm always willing to learn. Yesterday, we reopened right where we closed, and it's a drift up and multiple highs, a very weak high in the overnight session. The point of control pushing against the high of the session. Tons of fuel to continue higher, in my opinion. It's pulling back to the mid now. Market's selling off a little bit just now. And it's interesting. It's been doing that pretty regularly all week, just around this time. It's trying to it tends to rebalance, and sell off right before the open. But we're still above mid. We're still above yesterday's range. We're opening in a gap, most likely, and we have a point of control, the overnight point of control, right near highs with a weak high. That is a setup. If we do if we turn around on the open and start pushing towards that point of control, we're likely to see a very strong push, or a relatively strong push through the overnight high. The volume overnight is in line with what we would consider to be common, and the range is okay. It's 8 points. As I said, it seems like it's summer trading and it's already tightening up. So that's where we are. That's where we've been. Where are we going? What are our scenarios for today? Let's clean this chart up. The scenarios for today. Before we get into that, though, I really want you to know that tomorrow, after the close at 4:30 Eastern, 3:30 Central, we have an open public Ask Me Anything AMA session. The link for it's right there, ft71.com/June 2018 AMA. It's also, the link is also in the description of the video of this stream on YouTube. So if you pull up the stream once we're done, you can have a look at that and just register. Your email is not sold or spammed. This morning, open auction out of range is the most likely play. We've pushed through that gap zone. We are inside of a previous balance area, and 2754 is the point of control of this area, and so we're opening right on top of it. We're at 2754 and a quarter, so most likely an open auction, two-way action. I'm looking for this to actually respond to yesterday's auction, balance, and then push out, hold that high, and then start to push through, and then with the overnight volumes likely to kick in small for the next target up 2760. That's my expectation for today's range. I'm looking for an impulse and a continuation into the overnight high. Okay, that's the primary scenario for today. Barring that, open auction that tests higher, gets into 2758, pushes up, and then gets responsive. Yesterday, the large traders were sellers all the way until the close. We'll see how they participate today. I'll show you how I'm tracking that. I expect an impulse down through the opening swing and a drift down into the prior day's range, bounce, and then continue lower to finish in balance, expecting a profile that looks something like this in today's session on scenario 2. So scenario 2 seeks to accomplish the continuation from yesterday. We could even get an open rejection reverse, a quick test down and a push higher. But eventually I'm looking for it to find sellers like it's been doing and then move lower before balancing back out. The auction is thoroughly checking both sides. I mean, you look at yesterday. Yesterday we took out the prior day's high and we took out the prior day's low. Okay, that's the prior day's low and prior day's high. And we went all the way down, found buyers, and pushed all the way back up. The auction is really checking things out pretty well. Also, with double bottoms, double tops, it's pausing at day time frame levels. It's the day time frame trader that is mostly in control, it seems. There is some participation by 30+ lots, but it appears to me as though the market is really being driven by short time frame traders or small time frame traders. This is what I'm using to track the overall action. I'm splitting the large from the small lots by 30 contracts based on a study that's done by a member of Convergent, a statistical study that's updated once weekly. And so once we split them, the orange line is the small lots, the white line is the large lots. And you can see that yesterday the large lots spent a good amount of time selling, drifting down, while small lots held steady through the selling and then started to push back up. The large lots started joining them right on the closing bar. This closing bar had 8,500 contracts traded. That's a point and figure chart. Anyway, that's just a way that to track that. The other way, of course, is through the delta chart here. And I normally split these deltas into small and large right on the chart. That's what I've got. Again, I want to remind you, tomorrow, AMA, 4:30 p.m., register. Good luck.